Thanks, Paul. Well, we're not going to get to a low-carbon world without the active participation of capital markets, the investment community. And I spent the last 20 years working with asset owners, the pension funds, sovereign wealth funds, foundations, and the money managers that manage those assets on their behalf, trying to get them to understand that environmental, social, governance issues should be integrated into the investment decision. And not just because it's the right thing to do, but because there's a business case to do this. It just is an element of smart investing. And there's no question that we have a ways to go, but when you step back and look over the last 5 or 10 years, I think the investment community, by and large, has made significant steps at beginning to look at environmental issues, not in an isolated aspect, but as part of an investment decision. And carbon was the issue that put the broader range of issues on the door. And the fact is, the way the investment community has chosen to deal with this, I think there's safety in numbers, is that when you look globally, asset owners and asset managers have come together collectively through a number of multi-jurisdictional, multilateral organizations to begin to educate themselves on the issue. Carbon Disclosure Project, where investment managers and owners got together and started to go out to corporations globally, asking companies to disclose more about their carbon risks and opportunities, wanting to know as owners how the companies that they owned stock in were dealing with these issues. UNEP FI, we have the United Nations Principles of Responsible Investment, which again are bringing investors together to ask these difficult questions.
How many bucks worth? PRI, which we talk about, $20 trillion of investment funds saying, hey, investment chain, what are we doing about this stuff? Then that's a big chunk. Even the insurance industry would agree that's a big chunk of change, right? Michael, back over to you.
And it's a growing voice. And the thing is that it's not uniformly accepted. There's certain geographies where the asset owners are more in tune with these issues. From a global perspective, there's no question that in the United Kingdom, Netherlands, and other countries in continental Europe, they're ahead of the curve than, say, we might be here in North America. That's not to say there are not North American institutions that are not leading the pack on this. Right in our own backyard here in British Columbia, there's British Columbia Investment Management Corporation. The Canada Pension Plan Investment Board would be 2 asset owners in Canada that would be very much leading the pack in this regard. So we have some Canadian talent certainly involved in this. It's interesting because it's not just about looking at these issues as far as investing in companies or in fixed income. Real estate, as everyone knows here, real estate has a tremendous carbon footprint, and we're starting to see a lot of involvement now in the institutional side, integrating environmental issues, carbon, into their valuation models on real estate, and it's starting to make a difference in directing where capital flows go. The one big challenge, and then I'll wrap it up initially, for the investment community is that an issue like climate change, the risk, if you're looking at the risk side of it, it's difficult to quantify when that risk is going to hit. But most people will agree that it's a medium to long-term risk. And in the investment community, medium to long-term doesn't pay the bills in a lot of cases. Obviously, the investment community is very short-term focused. So that's a big dilemma for us, even for pension funds, which should have a long-term focus for plan members. So I think we've come a tremendous amount. There's a long way to go, but if we're going to get to where we want to go, the capital markets, through all of its aspects, investment banking, IPOs, private equity, infrastructure, real estate, fixed income, equities, have to be part of the program.
Michael, brilliant. Quick translation. Not that I think the audience are fools. Definitely not. Sovereign wealth funds. What's that?
Well, those are the large pools of capital that are essentially controlled by national governments, which are becoming very, very powerful actors in the global economy now. You've got India, you've got China starting to buy resources all around the world now. So it's the Middle East and so on. Those large pools of capital controlled by government.
They control about $3 trillion today, but the projection is an 8% increase every year. Huge concentrated pools. One of the biggest, the Norwegian Government Fund Global, which used to be called the Oil Fund, but is now called the Norwegian government fund global, controls 420 billion euros. So these are great pools of capital that are looking at these long-term issues. High net worth, what does that mean in English?
That's what you are.
Yeah. That's what I always tell my wife. I say I'm high net worth.
Well, high net worth individuals are those, I mean, there's various definitions, $100 million of...
That's ultra high net worth, right?
Oh, that's ultra high net worth. But, I mean, it's people with a lot of money.
Okay, it's the good old-fashioned rich. And the point is that in terms of the global economy and the financial system, right, you're beginning to see these pools of concentrated capital. If you take the good old-fashioned rich, 2000, 8.6 million of them controlled $22 trillion. 8.6 million controlled $22 trillion. Today, after a bit of a pummeling the last 2 years, the same 8.6 million people, give me a guess, how much do they control? So in 2000, it was 22 trillion. Today, it's, give us a guess. That was close, 36 trillion. It's 32 trillion. So it's the same group of people. If you take sovereign wealth funds, 3 trillion. You take the rich, 32 trillion. If you take pension funds, 29 trillion. There are these vast pools of capital and finance that if we want to reach a low-carbon economy at some stage going forward, they're going to have to change direction a little bit. And that can be part of the conversation going forward, right?
Yeah, I mean, one of the interesting things, especially in the high net worth community, is, 20 years ago, if you would say to people, it makes sense to look at environmental and social issues as part of your investment decision. It's a better educated, more informed decision. They would say, no, all I need to look at is the hard financial ratios we've been trained to look at. If you're looking at anything else, you can do that if you want to, but that's a values thing. It's not a value thing. That's flipped on its head, Paul, completely. And now people are seeing the opportunity in these types of investments. I will make money out of the environment. So.